While economic diversification plans in Kuwait may be less well developed than their neighbours, the UAE and Saudi Arabia, the country's efforts are beginning to bear fruit. That's what we're looking at today on Inside AB. My name is Jeremy Lawrence and I'm joined here in the studio by Bernd de Boosman. Okay, Bernd, you wrote a piece about Kuwait's economic plans to move away from oil, at least somewhat. Can you tell us what you learned?
Well, oil is still about 60% of Kuwait's GDP. It's the most oil-dependent country in the Gulf. But the country's kind of, they're facing the same issues as every other Gulf nation in terms of lower oil prices and how to adjust to that. So now, increased consumer spending and there's more of an appetite for foreign investment. So last year, their non-oil economy grew by 3.3%. That's up 2% from the year before that. So things are moving along quite quickly in that regard.
Okay, what's driving this?
Well, one of the main things is project spending. There was recently something called the Kuwait Investment Forum, and there they unveiled something called the Northern Gulf Gateway Plan, which is kind of a plan to completely redevelop the northern part of Kuwait. Now, this is a really very, very substantial project, but it's supposed to add 220 billion to the country's GDP. Wow. As well as attract 200 billion in foreign investment from all over, from Europe, from Asia, from elsewhere in the Middle East. It'll also create 400,000 jobs and attract 3 to 5 million visitors once the project is completed.
Okay.
So
is it an economic zone, like a NEOM kind of plan?
It is kind of a NEOM sort of, yeah, I would call it kind of a mega city sort of project.
Okay, that well-used term.
Yeah.
There must be significant foreign interest in this project.
Well, yeah, and in particular from China, because China sees Kuwait as kind of a key part of its One Belt, One Road initiative, which is a $1 trillion project to build a new Silk Road from Asia to Europe.
Okay.
So it's very substantial. So the Chinese firms are very involved in that project and in Kuwait Silk City and something called the Five Islands development that Kuwait's doing off its coast. Because, like I said, China sees this as kind of a very important stop on the new Silk Road, as it were. And for both countries, it's already starting to pay off. Chinese and Kuwait bilateral trade has reached 12 billion, which is a 26% increase from the year before, which is, that's a very substantial increase for 1 year. In particular, China is the one that's kind of driving a lot of these projects.
I would guess with China, apart from the Kuwaiti market, Kuwait would be a very good entry point into Iraq when the country gets back on its feet a little more.
Of course, I think that's why they chose Kuwait, because it's very well situated. You have Iraq there, you have Iran there, you have the rest of the Gulf. And also you're on the way to the other markets, Turkey, Europe.
Yeah, you're heading north.
Yeah, so it's kind of in a very perfect location for Chinese purposes.
Okay. Now, there's been other changes recently to the stock market to encourage investment.
Yeah, this is also quite significant. So what they've done now is they've divided the Bursa Kuwait into 3 distinct segments. And the idea is that this will attract investors and IPOs and help make everything more transparent. So analysts now have kind of they're very positive in the medium and the long terms about the Kuwaiti stock market. And that's in turn going to help different sectors, particularly banking, because finance companies are very well represented on the Kuwaiti stock market, and it'll also help them get revenue for these infrastructure projects that they're doing at the moment.
Okay. Now, let's not kid ourselves. Obviously, oil is still overwhelmingly the main driver for their economy, and they've been investing a lot recently or announced plans to invest heavily in the oil and gas sector.
Yeah, I guess you could say they're hedging their bets, because just this week, actually, the Kuwait Petroleum Corporation pledged to spend 500 billion to boost capacity by 2040 to 4.7 billion barrels. And of that, $114 billion will be spent in the next 5 years. And this is going to put their output ahead of Iraq and Iran, which are the second and third largest oil producers after Saudi Arabia. They're certainly not turning their back on their traditional moneymaker.
Doesn't sound
they
like
can't.
Yeah. But they're giving themselves options.
Yeah, and as is the case in Saudi Arabia and in the UAE, they've kind of seen the writing on the wall that only having oil as the primary thing, making money, is not going to work anymore.
Okay. Okay, great. All right, well, Bern, thanks for that. So Kuwait, they have got plans to move their economy away from just being based on oil, and we've heard about them today. So thank you for watching this edition of Inside AB. Please do join us every weekday at 10 a.m. Subscribe, share, and we'll see you next time. Bye.